Good morning, everybody, and welcome to FOMC Day. And if you are going to be in the chat room, then
you're a madman.
I've come to the right place then.
yeah, because as I have sent you out really quickly, your FOMC Day prep, which we send out 8 times a year because we have 8 of these meetings every year. Be ready at 1 o'clock. And if you are going to be ready at 1 o'clock, then you need to be ready to get into a prison gang war in the shower, and you are completely naked. So I know it's a horrible visual, but that is how dangerous as well as volatile you're going to need to be looking over your shoulder the entire time. And if you are going to be trading zero DTEs, pray to whatever God is your God and make sure the amount of money that you're using is something that you do not care about whatsoever. So, moving on forward with that, quick look at futures. YM plus 45 points, nothing. NQ plus 58.50, nothing. ES plus 13, nothing. And the Russell 2000 plus 6, nothing. Talked to you about that yesterday, how prior to the FOMC day, you typically get a move, and then it all goes quiet. And yesterday, yes. Yesterday made you want to kick a fat kid in Kmart. It was so choppy. Where? Oh, I still got my audio on. Hang on a second. Financial on. And so, yeah, you went nowhere. And guess what? You're still not going anywhere, like I shared with you in your FOMC Day prep. So really quickly, we're taking a little bit of a change on the structure. On Wednesdays, I'm definitely going to do. And this is going to be the first of multiple, I don't know how many weeks are left in the year, Wide View Wednesday, because somebody messaged me yesterday who I have an enormous amount of respect for and said, if you got rid of zero DTE bullshit, I would pay you quadruple. And you know what? I don't disagree in any way, shape, or form. So anyway, here, the SPX yesterday, the red close, and I did miss it. I missed it on Monday. That Monday was a second plus 90% day, but like I spoke to you about how we're obviously 2 plus 1% days in a row, we're going down. We went down, and we fucking held the 5-day moving average all day long. Anyway, again, significant for me. We are less than plus 10% year over year. Considering everything put together, this is something as well that tells me as far as an algorithm trigger, hey, you should not be looking for much more downside if you are at all. Spreads, one spread worked, 55.95, 5600. The 56.30, 56.35, like I shared with you, needed to be rolled from the $3 credit, and you all know where to roll to. Yesterday was a minus 1% day. We all know how that works. QQQ was your big one. Yesterday was all QQQ. Big day. 7-point range. Big day. As you see, I will bring on to that. Smallest range since this correction started. Smallest range since we got started in this. 56 points yesterday. So again, over on the QQQ, everything was there. Minus 2% on the day. Again, big day on the QQQ, and we're going to get into that. And then over here on the Russell 2000, the IWM, yeah, you had your dip, but look where you're holding. You're holding that 203 area. So enough of this crap. And let's get on to what we are going to start doing here on Wednesdays. What I'm going to show you here, as far as my view, is 4 different stocks, the wide view, to get a big understanding as to where we are, because a lot of people don't like to trade zero DTE. They like going out 6 months. They like going out 3 months. They like going out 12 months. So start you out here with Google, and on all 4 of these that we're going to go over, they are all looking at the 15-day, 30-minute chart just to see where we have come from in recent times for the month of March, since 15 days brings you back to February 26. Not looking great. but not looking too bad, but not looking great. So I'm going to widen you out, take you out here on a 20-year weekly view so that you can see many of these is when their IPO took place. Like I remember where I was when Google IPO'd. Might have actually been before this, 2005. Maybe it is 2005. I don't remember. And then you get your 2007 highs and your 2009 bottoms. So what I have here is in gray, the count that I'm looking at. I've got two different counts on each one of these charts. But what I see here is your primary one from your IPO to 2007, your primary two being down there at 2009, and then possibly on a bearish view, bullish view, bearish view. Looking here at your primary three having topped in 2018, an ABC correction for your primary four being there on COVID, and where we are now is into the final wave. The one being the bounce off of COVID into 2022, the one over there, the two down here into the 2022 lows, and where we have gone into now being the three. So we'll clean this up a little bit and look at where we're at from a 5-year view, which we can almost see the COVID bottoms. Could be, which I don't agree with, but it could be that was your three wave, your primary three wave top over here in the end of 2021. Your primary four bottom over here, back on 2022 bottoms, and where we are headed up into here is now the primary five. I prefer, unfortunately, to look at COVID being the bottom, primary four, and this was your one into 2021, your two into 2022, and where we are now is into our three, which our three for Google has 100% completed. That's the view that I've got. You've got your bounce coming off of 2022 up into your top, which you can see is a very clean structure over here into October of 2023, and a very quick drop with the rest of the market down there into October 27th when Israel invaded Gaza, and that's your 1-2. From that 1-2, your Fibonacci extensions, your 100, your 123.6 are right here between 178 and 191. That's exactly where your 3 came to, which is back here in July 2024. And then your market correction into that big August-September bottom, with Google bottoming in September, not in August, like the SPX. This being your 3, this being your 4. So with the 150, 161.8 being there at 207, 213.86, and we made it right to the 150 extension. Very strong, very clean, easily could be that we have completed all of wave 3. However, if we're going to go off the COVID bottom into the 2021 highs, into the 2022 lows, we've only reached perfectly to the 123.6 extension. Therefore, this would then be our 1-2, as you see in gray, this being our 3 top, our 4, possibly getting a little bit lower on Google, possibly, before we finish off with our wave 5. And our wave 5, if we look here, which I think I do have on here, I apologize for wasting your Wednesday time, and there it is. The wave 5 should be targeting somewhere up here in the 235, 246 region. I would not bet my mother on it, but that is what we should be looking at for the last and final wave on Google to the upside before the major correction takes place. Bring you back. I'll do that later. Apple topped at 250 like prior to the end of February. If you guys remember when we were talking about that with the bounce on Apple, blah, 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 blah. From here, from February 26th, boom, 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 very fractional or ugly structure, really. And then your big sell down taking place last week, March 10th, down into here. And look at how it is just spaced out since Thursday. Thursday, Friday, Monday, Tuesday, and here we go into the FOMC. Well, where you're at your 50 retracement, your 23.6, your C equals A 100 extension, your 38.2, and your 23.6. So let's look at what those actually mean. So we'll zoom out here on a 5-year weekly, and again, again, going from your COVID bottom, which very well could be your big bottom, but I'm not counting that at the moment. your COVID bottom into your 2022 highs back there in January, down into did not bottom over here in early part of the year like everybody else did over in 2022 in June. Bottomed all the way in the beginning of 2024 is where Apple bottomed. Completely different count. AB for your A wave, B wave, and then your very clean, or break it down however you want. It's a perfect ABC. Down here to 124. 1, 2, boom, boom. We hit the 100 extension almost perfectly at 253.96. So this should be, from that view, that point of view, only a wave 3, which I have in orange. Also have that in orange because coming off of the bottom here in 2024, right at the beginning, year 1 and year 2 going into the, April 2024, and year 3 coming out there right at 255.62. So again, fits that what we have is our wave 4 correction bottom right over here into this configuration of multiple Fibonacci's that all cluster into that zone right there at 208. And what we should see is a wave 5 higher to end everything. Let's see if we can zoom this out and look at it from the bigger structure, because again, over on Apple, we are talking about going all the way back to, the 2002 bottom. 1, 2. This very likely being the 3 that we are talking about that we're going into. Here's our 1, here's our 2, our 3 being there in 2021, our 4 being there in 2024, end of 2023, beginning of 2023, I apologize. And here we are with our 1, 2, 3, 4, and we should be zooming out and looking at one more wave to the upside on Apple, which we will extend here, somewhere in this 285 area. But without any shadow of a doubt, from my point of view, this 208 is one hell of a strong bottom for Apple. Apple trades completely differently than a lot of other these stocks that tend to follow the NASDAQ, or the NASDAQ and the SPX. But Apple should have a strong bottom here at 208. Meta. Big difference on Meta when we talk about everything else. So again, here looking basically at the end of February into March, bang, bang, bang. C equals A right here at 589.60, perfect 23, perfect 23, perfect 23, and the 2024 close having taken us negative on the year, almost to the 200-day moving average, and the big 23.6 sitting right underneath it. So what are we talking about here? What are we talking about? Well, let's look at this from a COVID view. Just off of COVID, all right? We're only talking about COVID here. The 80, or no, not even COVID. Yeah, COVID. COVID was way, way, way over here on the left, down here at 142. That's your COVID bottom, 142. And then you had that ridiculously massive minus 75, 80% sell-off down here from 2021 all the way down here into the or later part of 2022. Huge sell-off over a year on Facebook. But where you came out to was that 100, that 123, right over there, which we'll zoom out on in a little bit. But coming out here off of the 2022 bottoms, massive. 1, 2, can see a clean 3 fitting right in here between the 100 and the 123.6 extension, a 4, and this being a 5 with the 5 almost coming to the 200 extension off of that. You see up here the 300 extension that I've got drawn, which goes back to 2012, and we'll look at that in a second. This is at 726.23. So for me, I look at this much different with Meta, that I think that Meta has topped 100%. IPO, boom, 1755 bottom. IPO was well after the 2009 bottom. I can see this in blue as your 1, 2, this being your 3, a very, very deep 4, which this negates a lot of things when you talk about Elliott wave rules. But this is a video game and it's there for interpretation. So big one here as far as in green, 1, 2, your 3 being here, 123.6 would have been perfect, and you came right up to the 176.4, almost to the penny. So this could be the 3, and we're due to get the 4. The 4 would take us down to around 470. So I do still see a little bit of downside, plausible and possible on Meta. From the other view, which is the view that I prefer, being that we had our 1 from the IPO over here into the 2018 highs, the boom, the COVID low, or no, sorry, the 2018 low, the 2, 3 topping us out here over in 2021, the big wave 4 over here coming down into the 2022 bottom, and then this is our wave 5, meaning 1, 2, 3, 4, 5 is complete, and Meta should start taking a complete and total shit down into the 300s. Don't have that on my radar or on my bingo card, but I am not bullish on Meta. Not like I am with Apple, definitely not like I'm close to being with Google. So now I bring you on to Tesla, and Tesla is very similar, where it brings up some questionable moments, we'll say. Off of that 313 rejection, which was just picture perfect, here in the month of March, big sell down, and right down to the 221.34, 76.4 retracement of the entire bounce from 2024, and almost completely retracing the entire Trump pump, which we talked about. So what's going on? Well, like I've shared with a lot of you guys, 258.94, that's my upside, which doesn't even fill your gap going to next week. Next week's gap, or last week's gap, March 7th, that takes you up to 262.65, and you got another gap up above it. So for that purpose alone, I do see Tesla as being a very good bounce candidate. Take you out on the wider view, and you can see this. This is a fucking Ringling Brothers and Barnum and Bailey fucking roller coaster. Big 27.37 bottom over in COVID, move up to 416.67. Big drop over here into 2022. What was this? Fucking 101.81. And if you guys remember back here, I forget when it was. Oh, it was here in 2024 where I was saying, dude, you got a fucking massive play on Tesla. You're getting a big bounce coming off of here, and just bang, took 3 days. Bounced right back up to that 196. Anyway, the view on this. The 1 topping 2021. The 2 bottoming 2022. 2023, whatever. And now you have a 1, 2, 3 structure with your 4, which very, 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 very close to not being a 4 anymore. All the way down here where the drop itself has been a clean AB, AB, C equals 2 times A, 2 times of the original drop. Now, one thing I want to bring to your attention here is on Tesla, you got here 1, 2, 3, 4, 5, 6. This is the 7th red week in a row on Tesla. You got to remember as well, a lot of people hate him now because of what he's doing. Bring you back to, where was it? Oh, yeah, it was when Tesla was almost going to file bankruptcy. .com or IPO, I think I've got it here at 2010. I could be wrong, but yeah, 2010 year IPO. Nothing really as far as the structure goes. You can see here, absolutely nothing. It's a $20 stock. And then all of a sudden in 2018, this thing just went fucking, or 2019, bam! Primary 1, primary 2, 1, 2, 3, 4. So I got a really hard time saying that Tesla's going up to 500, 495, 550. A really hard time considering how amazing the electric vehicles are over in China. I really have a hard time seeing Tesla head up to the upside. However, I do see that it is on very strong support. So on Tesla, I would not be as bullish from a buying the dip and looking to the long side, but this is definitely one of those ones where you could start looking at it from an aggressive point of view to start thinking about selling puts. Where was I again before I leave you? 20 weeks, 20 weeks, 20 weeks. Here we go. 1, 2, 3, 4. Nope, that's not it. Where was it? It's definitely not going back here to 2020. Oh, yeah, here it is. Here it is right here. Coming out of December of 2018, December 3, 2018, and the sell down into June of 2019. Just this period here alone. Coming out of that, well, at the time, what was it, 25.30, which I don't remember what price that was prior to the multiple stock splits, down here into June of 2019. 1, 2, 3, 4, 5, 6, 7 red weeks in a row. So be careful about your Tesla. But again, Tesla, look at it from a value point of view, look at it from a whatever point of view you want. I like Tesla, for me personally, only because I like this area. I like this 208 to be a very good support zone. I like the break above 242 for 258, and my ultimate is always going to be 313. So yeah, I can see Tesla making a move back up to 313 at the price that Tesla's trading at right now, 225. Call it 208, 210. If you got a lucky, dip on there, that's 100 points to the upside on a $200 stock. You make 50% on the stock alone, let alone if you're going to be trading, selling, cash secured puts or. Well, actually, I wouldn't buy the calls because it's going to take a little bit too much work. But yeah, I see 313 as the upside. So anyway, apologize for rambling on. FOMC later today. Take all the drugs that you need to take. But yeah, at 1 o'clock, be ready. And I'll see you in the chat room.